Are you wondering how VAT works? Well, in this video, I'm going to give you a brief overview exactly how it works and why it might be or might not be a good idea for your business. As a business accountant, my team and I spent all day long helping business owners on their journey. And as you can imagine, VAT is a common topic for discussion. It's one of those weird taxes that even with accountants, it's difficult to understand. You quite often have to go to a rule book to find out a specific thing. It's just very detailed. But in this video, I want to show you a general overview of how it works and show you some examples so you can just understand it in practice. Now, before we start with the basics, just a disclaimer, we always do these videos from a top level, broad brush, kind of wide, generic scenario point of view. And that's what we're talking about for UK small business owners in the UK market. So VAT is one of those really weird taxes in that it's actually paid by the consumer. It's what they call an indirect tax. It's actually paid by us as customers or consumers every day of our lives. You know, when we go out for our shopping, we're likely to have paid VAT. We just don't really clock it. You know, if you looked at your receipt, you'd see it on the bottom there in many cases. And the reason we don't think about it is we just think about what we pay, don't we? You know, if it's 150 quid, it's 150 quid. We don't worry about it. However, there's this weird thing that happens quite frequently when somebody, say, goes and gets a builder and says, come around my house and quote for doing some building work. And they see this, you know, £10,000 plus £2,000 VAT equals £12,000. Suddenly, psychologically, it makes a big difference. And it's one of the struggles, as we'll talk about later in the video, with pricing that plays on people's minds, is that when it's visible in those kind of scenarios, it seems to land differently. So yeah, we pay it every day, but oddly, the small businesses in the middle who are VAT registered are kind of the unpaid tax collectors for HM Revenue and Customs, as we're going to see. And part of the weird thing in the UK is that we've got a very high VAT registration threshold for small businesses. So sometimes, I said to you, if you look at the receipt, you might see that you've paid VAT, but sometimes you just won't have. And the reason being, if you're buying from a very small business, quite often they're not VAT registered, because here in the UK, you don't register from day one. You don't have to register from day one anyway. You can voluntarily register, as we'll talk about in a sec, but generally you have to when you reach £90,000 in a 12-month period. So for that reason, you will get businesses that just don't charge you VAT. Now, we said sometimes it could be worth it to register financially. So in your small business, generally, there are two main scenarios and they're real themes. The first theme is if you're dealing with the public, generally, and we'll see why in a minute, you're going to not want to VAT register unless you have to. And there are exceptions like always, but in general, it becomes a pricing struggle if you have to register for VAT. So people tend to wait. If you're dealing with businesses though, particularly VAT registered businesses, so, you know, relatively established businesses with turnover of over 90,000 that would have had to VAT register, then quite often it's actually financially better for you to be VAT registered because your customer won't care about the VAT. So the public will care about the VAT, as we'll see. The VAT registered businesses we're charging the VAT to don't, because they can reclaim it. And I'll show you how that works as well. So in those two general scenarios, that's the common theme we see with businesses. So the way it works as a consumer then, let's just say we've bought a really cheap TV. So the business that sold us the TV has decided it's going to sell the TV for £100 plus 20% VAT. Now, 20% of the time recorded the video is the VAT rate. So 20% of 100 is £20. So they're selling it for £120 and we bought it for £120. Now, at the small business end, what happens is they take that £20 and normally once a quarter, you can do it more frequently, but normally once a quarter, they're going to hand all the £20 they've collected from all the TVs and hand that over to the revenue. But before they do, they can offset any VAT they've paid. And I'll show you this in examples in a minute. So if you imagine if they paid their accountant and their phone bill and all their other costs, and they've added up all those little bits of VAT they paid to everybody else, they can deduct it from all the £20 they've collected from their customers, and the difference is handed over. And that's what's known as reclaiming VAT. So when they say there's a VAT reclaim, it's what they mean is they're keeping some of the money they would to hand over. So it's almost like an instant reclaim. And you'll see that in the examples I'm going to show you in a minute. Now, I don't want to go too deep into it in this video, but I did say there's a couple of different rates you could have. So generally VAT is 20%, but some things just don't have VAT on. Or if they do, sometimes it's a zero rate. And they're technically different things. So there are products out there, like some of your food and things like that are what's called zero rated. So you're not actually paying any VAT on them, but they're technically VATable, and it's important for technical reasons. Sometimes they're exempt, so there's actually no VAT on them. So generally, like your insurance won't have. And then some things are just outside the scope. You won't see that as a consumer very often, but maybe you're doing some work with another business abroad or something like that. Sometimes you can have outside the scope sales, which means there's no VAT charged on them. But in your everyday life, quite frequently, you'll see this 20% VAT. And then there's also something known as reduced rate. So sometimes you'll see a bill that's got like 5% on. You're thinking, what is that? And there's very specific services that have this reduced rate on. So let's do some examples then. Let's take this TV. So you're a new business in this case. Say you're a new startup. You didn't want to VAT register because we've said generally when you're dealing with the public, you might not want to. And your selling price is £100. So you've not had to add any VAT on it. You're just selling it for £100. And I'll show you this here. And then you've paid your supplier for all the electrical bits that go inside the TV. We're just keeping this one simple. You've paid them £60. So therefore you've made a profit of £40. £100 less 60, 40 profit. And again, we're forgetting all the other costs you would have paid as a business. We're just talking about your per TV and not even worrying about your delivery at this stage, just literally the cost of the electric that went in it. You can see you're making £40 per TV. Now, if we look closely at the costs of the materials that you've bought, all the electrics for the TV, you can see, although it's cost you £60 out your bank, it's actually £50 plus VAT that makes up that sales price. And that's going to be important for this example. So now then, let's say your business has gone VAT registered. It either had to or you've decided to, whatever. So now it's tomorrow, we've VAT registered. Let's have a look at what the numbers look like. Now, if we just went, well, look, we want to keep our £100 sales price. We've now got to add £20 to it. That's the 20% standard rated VAT that we've now got to charge. So our sales price becomes £120. Our costs are still £60 in terms of that's what's come out of our bank, but it's actually only cost us £50 because the £10 VAT that's on that receipt, we're going to reclaim. So if you remember I said about VAT reclaims, when we do our VAT return, normally every quarter, we're going to take all those £20 that we've collected on our TVs, and each time we've spent all that money, we're going to hand over the difference to the revenue. So we're reclaiming that £10. So as you can see, now our profit's actually gone up because we were able to reclaim the £10 and we're charging all of this new VAT money on that's not our money straight to the customer. We're actually making £50 per TV, so it's gone up, which sounds great, but obviously the keen-eyed of you will notice that the TV is now costing the consumer £120. And if the same TV is being sold by someone down the road who's not VAT registered at £100, which one are they going to buy? Probably not yours. And this is where the pricing problem comes when you're dealing with the public, is they are very sensitive to that. You can't generally just add on your 20%. Now, in normal cases, you're not normally going to do this because you've just increased your profit per unit and you were probably happy with your profit per unit before. So in order to keep it, the maths look slightly different. And I'll show you that in a minute. But before we do, let's say you did worst case. You went, look, the shop down the road is charging 100. I can only charge 100. So you've kept your sales price at 100. What happens to the maths is this. Your selling price is now still £100. But if we work it backwards, that means you're only getting 83.33 of it. 16.67 you're going to have to hand over in VAT. But your cost is still 60. And we're still reclaiming that £10 because we're still VAT registered. But you can see because our sales price is now effectively reduced, because we have to give HMRC some money, our profit's only 33.33 per TV. So it's gone down quite considerably. So you can see normally you have to move your pricing up if you want to maintain the same profit you were making before being VAT registered. So in reality then, you're not going to put it up to 120. What you're probably going to do is charge 108 as we show you in this example. So you can see I've worked it backwards on here. We've now got a sales price of 90 with only £18 VAT. So 108, bit more palatable maybe from the customer, although I quite like 109 or 107 for psychological reasons, but anyway. And the cost is still £50. So our profit per unit is back to being £40. And that's the more common scenario. Small price increase, same profit, or you may even take a little bit of a hit, but you won't normally absorb all of the VAT because it becomes a problem for you. And if we revisit then the first example where I showed you we made the selling price £120, if we did that in a business-to-business environment, so say you're selling the TV to my business is VAT registered, I don't care about the £20 extra you're charging me because I'm going to recover it on my VAT return. I only care about the 100. So if that's the case and all your customers were VAT registered businesses, you would be in a better financial position in general by registering to be VAT, because we're not sensitive to the extra £20 pricing. We're still only really paying £100 and you're going to make extra money per unit because you can recover the VAT on your costs. And that's why in the business to business scenario where you're VAT registered, they're VAT registered, it makes quite often financial sense. So while that's the basics of VAT, there is a big thing here to talk about, and that's the way it's reported. So you might think, particularly if you're business to business, this sounds like a goer, I'm going to go and register. But before you do, let's just talk about the admin requirements. Under something known as Making Tax Digital for VAT, not to be confused with what is just coming in at the time of recording this video and Making Tax Digital for income tax. This one's been around a bit longer. And that's the requirement to submit digital VAT returns and keep digital records. And normally you're going to do that in some sort of software, something like Xero, which is an accounting software. Although you can keep it in spreadsheet, that's okay. You just need to get some what's known as bridging software. That's what we call it in the industry. And it sort of selects parts of your spreadsheet to send across to the revenue. If you've done this before, there used to be a free tool that's been scrapped a long time ago, which is very much the direction of travel from HM Revenue and Customs at the moment. So you should take that into account if you are thinking of registering, because you're going to have the hassle of actually doing these returns, making sure you keep digital records. And probably the biggest thing is understanding whether you actually have to A, charge VAT, B, at what rate, and then C, on the VAT that you're incurring, can you actually reclaim it? Because some VAT, even though you're actually being charged it, doesn't mean you can actually reclaim it. So for example, if you're out entertaining your client, so you've gone out and you've bought a client lunch, generally, you're not going to be able to reclaim that VAT even though you've paid it. So learning those kind of rules can be a real challenge. So you might be thinking after listening to this, well, what actually happens then if I'm in a situation where I haven't got any sales, haven't made any, or I'm in a startup phase, but I'm incurring costs? Can I get a refund? And the answer is yes, absolutely you can. In your return, you just put all your VAT claims and actually HMRC will pay you the money back. It's quite good. On the first one though, you've just got to be very careful because it's quite common that they will investigate investigate a repayment return that's the first return. So just make sure all your records are in order and you're ready to answer their questions. And there are other instances in business types where you would constantly get VAT refunds. So for example, if most of your products were 0 rated, as we said, or let's say you're in the construction industry and you're VAT registered, there's some special rules known as the domestic reverse charge. They mean quite frequently you'll be in a repayment situation. And where that's the case, you might even investigate getting monthly returns, because then your cash flow comes back to you monthly. So it could be quite good, albeit you've got a lot more admin hassle. And finally, you might have heard of something known as the flat rate scheme. When you investigate VAT, you're going to hear of this scheme and it's going to sound amazing, but trust me, in most cases, it's not as awesome as it sounds. So watch this video and I'll talk to you more about it there.